Without looking at the title of this video, here's a trick question. How many ways can you be profitable by investing in real estate? Hi there, I'm Nawar Naji, a real estate broker with Chestnut Park Real Estate in the city of Toronto. If this is your first time visiting my YouTube channel, make sure you click on subscribe and that bell button to get notified of my videos. Yes, there are 4 ways to be profitable in real estate investing, and I lay out those 4 methods for you. First one is cash flow. And again, this is where you look at the revenue minus expenses and you want to end up with a surplus on a monthly basis. And a lot of investors focus on that, which is correct, which is right, when analyzing potential investment properties. The second way to be profitable in real estate investing is mortgage paydown, because you have rental income coming in, tenants are paying your mortgage, and you have the mortgage paydown, which accelerates over time. So as time goes by, more of that payment goes towards the principal, less towards the interest, and then it gets paid down aggressively. The third method of being profitable in real estate, and this is the one that I really focus on, is appreciation. So again, investing in areas that have potential appreciation above inflation. So this is where you look at, as an investor, a couple things. One is, what is the employment growth? What are the jobs in that specific area? What's the immigration? What's the infrastructure? Are there transit lines? Are there big developers going into the area? Is there government money going into that specific pocket? All those factors bode well for that geographic area from an appreciation perspective. And again, nothing is guaranteed, but having those items in place will give you a higher probability of an appreciation above the inflation rate. And the reason this is critical is the V. So if you look at over time, you have your mortgage paydown, not that flexible, mortgage paydown, and then you have your appreciation. So over time, right, if you have strong appreciation and you got your regular mortgage paydown, that V grows, and that V is your equity position. So in 5 years time frame, 4 years, 6 years, somewhere there, you're gonna have a very strong equity position, which will give you options. So now you can say, okay, I got all this equity. Do I take some of that money and buy a second investment property? Do I take that money and maybe pay for the kids' university fund? Do I take some of that money, invest it into a business, into stocks, whatever the case may be, buy a cottage? But you're gonna have options because you're in a strong equity position down the line. And again, that's because of the strong appreciation by investing in those areas that, again, have all those things taking place in them. Now, the last method or way to be profitable in real estate is tax benefits. Full disclaimer, I am not an accountant. I am a numbers guy, but I'm not an accountant. So consult with your accountant. He or she will give you proper advice. And again, investing in real estate will give you the tax benefits because you get to write off the interest portion of the mortgage. You get to write off your property taxes, deduct, and any expenses incurred managing that property. Now, again, your accountant will give you proper advice whether you should do depreciation or not, but there are definitely tax benefits when it comes to investment properties when you file your taxes on an annual basis and you complete, or say he or she, your accountant, would complete the T776 form. If you're looking to invest in real estate, please feel free to reach out. I'd be more than happy to share my experience and knowledge with you to help you with your journey. Last but not least, make sure you click on subscribe, and until next time, happy investing.